All right, welcome everybody. Oh, okay, Mark. Southfield. Oh, okay. I was very near there just yesterday. I was very near there just yesterday. I was in the Birmingham area. Yeah. Oh boy. All right, let's get started here. Welcome everyone to another webinar brought to you by optionslam.com. We'll get through the legality preliminaries here quickly. The CFTC rule is for you to read and understand before you risk your hard-earned money in the markets. Our disclaimer tells you that we are not licensed financial advisors. We are not registered investment advisors. We do not provide investment, nor do we provide financial advice, nor do we make investment recommendations. These webinars are for educational purposes only, and hopefully an occasional laugh. I am Marco, and this is my email address, optionslam.com@gmail.com. Please email me with your questions, your comments, your suggestions. In fact, I am looking for suggestions for upcoming webinars. We've got a new year just around the corner, and a bunch of webinars to provide to you to continue our tradition. Any trading related topic that you would like us to talk about, as you guys know, we generally focus on earnings related issues. OptionSlam is the premier site for earnings data and information and tools. So your trading questions and suggestions are welcome at optionslam.com@gmail.com. So last week, we got into some nuts and bolts about Leonardo Pisano, also known as Fibonacci, the mathematician. We got into some nuts and bolts discussions about what are these. I mean, everybody's familiar, almost everybody in the trading world that looks at price charts has been introduced to these Fibonacci numbers. I think we got into some really good background information last week. So if you missed last week's webinar, or was it 2 weeks ago? I think it was just last week, actually, wasn't it? Anyway, the most recent webinar, you can go to optionslam.com and go to the archives, to the webinar archives, which are found under the resources tab, to pick up that webinar. Today is really kind of a part 2. So just a little bit of a refresher. Interrelationships of fib numbers. What is the Fibonacci series of numbers? Just a quick review. You start out with the numbers 0 and 1, and you add them together, and the sum becomes the next number. Then you add the 1 and the 1, and the sum of those becomes the next number, 2. And you add the 2 to the 1, and the sum of those two numbers is the 3. And the 3 plus the 2 is the 5, plus 5 plus the 3 is the 8, 8 plus the 5 is the 13, etc. And this is the Fibonacci sequence of numbers. But that's not what we use in trading. We don't use the sequence in very many of the Fibonacci tools that are available on your charting platform. An interesting thing happens. If you take any two adjacent numbers and divide each one by their sum, a peculiar thing occurs. The values converge to 38.2 and 61.8%. Now this is one example of Fibonacci ratios. The 38.2 and the 61.8. There are many other ratios. And I'm going to, this slide is from last week. I'm going to get into a few more ratios today, And then we're going to actually play and practice with some of the fib tools and live charts of stocks that have earnings coming up in the near future. And again, from this slide is from the previous webinar, and here, this is important. You might want to jot these numbers down because I'm going to show you how you can customize your fib tool in your charting program. And you may want to use these numbers because your charting program may not use all of these fib ratios. See, these are the most common ratios that I use in my personal tools that I've personalized in my charting program. So you might want to jot those numbers down. Of course, you can always come back to the replay of the webinar to find this slide as well. These ratio numbers can also be thought of as percentages. In other words, the 0.236, you can think of it as the 23% retracement value. The 0.382, you can think of it as the 38% retracement value, or projection, whatever the case may be. So where do the fib ratios come from? I already showed you a little bit of an example of that. But again, here's the sequence. This is the Fibonacci sequence. 1, 2, 3, 5, 8, 13, 21 ad infinitum. Okay? It goes on forever. The 236, for example, ratio is found by dividing one number in the series by the number that is 3 places to the right. For example, the 8 divided by the 34. So you pick any number and divide it by the number that is 3 places to the right. So you take the 8 and you count 3 places to the right. 1, 2, 3. Divide the 8 by 34 and you get the 236. Another example of a ratio, the 382 ratio. And this will work for any number in the sequence, okay? You will always get the 236. You will, no matter where you go in the sequence, you will always get that answer. And the further out you go in the sequence, the more precise the ratio becomes to 236. And this is especially true of this 0.618, which is, well, let me get into that here in just a quick second. I'm jumping ahead of myself here. The 382 is found by dividing one number in the series by the number that is found 2 places to the right. For example, the 55 divided by 144. You could also take the 144 and divide it by the 377, and you're still going to get the 382 ratio. A little bit of magic going on in the sequence when it comes down to finding these ratios. And these ratios are pervasive. They are fractal. That's one thing. That's one slide I forgot to put in. Let's not forget to talk about how Fibonacci's are fractal. In other words, they work in all time frames. So I will be today referring mostly to the daily chart, but don't let me forget to dial in on some 1-hour charts or some 5-minute charts, for example. Okay, don't let me forget when we get into playing with the charts and applying the tools. The key Fibonacci ratio of 61.8 is also referred to as the golden ratio or the golden mean. It is found by dividing one number in the series by the number that follows it. For example, 8 divided by 13. 8 divided by the number that follows it. And the further out you go in the series, the closer and closer and closer your answer becomes to 0.61.8 or 0.6179. Okay? 0.618, I should say. And as you see, the answer is not quite 0.618 when you're doing 55 by 89, but it's close. See how the 8 divided by 13 is 0.6153? And then you go a little bit further out in the series, divide 55 by 89, and the answer is 0.618, 0.6179. The further out you go in the series, the closer and closer, these decimals become the perfect 0.618. Whoops. Okay. All right. Next, the fib ratios. Where do the fib ratios come from? So there's the sequence again. This is the Fibonacci sequence. We talked about where the ratios come from. They're interrelationships of these numbers. And let me show you a few other different ways that some of the other ratios come from. All right, we'll go through this quickly. Take any number and divide it by the next number in the sequence. That gives you the 618, right? We just discovered that, the 0.618. Take any number and divide it by the previous number in the sequence. I'm going to let you do that on your own. Okay? Take any number and divide it by the number 2 places beyond. We just did that in the previous slide. You can also take any number and divide it by the number 2 places previous. And that is also a valid fib ratio number. Not going to take the time to do this because I'd rather play with the price charts here in real time. So but I encourage you to do this. Just experiment with some of these on your own so that you can see how magical the fib numbers really are. Take any number and divide it by the number 3 places beyond. Take any number divided by the number 3 places previous, etc. This is where the fib ratios come from. Interrelationships. Now, in your charting software, you can edit, because all charting programs that I know of offer Fibonacci tools, but they don't all offer all of the ratios. You may have to customize your fib tool. Or they may offer all the ratios, but they may not have it as their default, okay? So you can customize. I'll show you how to do that in Thinkorswim, because that's the charting software that I always use in my own personal trading as well as in my teaching. Additionally, you can hide or show specific ratios in the various tools. And I'll show you how I do that. For example, I use some of the ratios in my extension tool that I generally ignore in my retracement tool. Okay, so I'll show you that too. Now, how do you draw using fib tools? How do you draw the fib lines on your chart? Well, first, we will work with the Fibonacci retracement tool. And to use the Fibonacci drawing tools, you must determine important historical price points, typically important highs, important lows. The retracement tool uses only 2 anchor points, one important high and one important low, or vice versa. You can draw from a low to a high or from a high to a low. You can do it either way. Then the tool will plot the Fibonacci ratios in between those 2 points where price is expected to find support or resistance. You'll see on my charts, I've actually customized my Fibonacci retracement tool to plot lines outside of the anchor points. The 3.8, the 5.0, and the 0.68 are the most commonly accepted numbers that traders are watching. Retracement levels. You can customize your device, your drawing tool, to plot lines outside the anchor points as well, and I'll show you how to do that. The 0.50 is a fib ratio. I've had people say, oh, the 0.50 isn't really a fib number. Well, it is a fib ratio. Remember how we get to the fib ratios? By dividing one number in the sequence by another number in the sequence, whether it's the next number after it, two numbers after it, three numbers after it, two numbers before it, et cetera, et cetera. Well, if you think about the fib sequence, where does it start? It starts with 0, 1, 2, 3. Well, what is 1 divided by 2? 0.50. So don't tell me that 0.50 is not a fib ratio. It is. And Leonard knows a lot about Ichimoku. Thanks again, Leonard, for your lessons on Ichimoku. Can also be found in our webinar archives under the resources tab at the website, optionslam.com. I wonder, Leonard, just how much Fibonacci numbers are used in the development of Ichimoku. Maybe you can talk about that with us someday. I'll come back to the slide. We'll come back to the slide at the end after we're done looking at some price charts. So let's do that. Let's get into price charts. I today decided to use the Thinkorswim's paper trading tool because I have some of the stocks I'm going to be looking at. I have my charts all marked up with notes that have to do with my trading strategy that I call the double eagle. And all those notes, I don't want to lose those, erase those, or let them complicate easily visualizing the fib work that we're going to look at. So let's start out with, and you guys are welcome to suggest a stock that you'd like me to look at. I believe that Fibonacci tools work on any price chart, on any stock, on any even very common. I'm not a Forex trader, but I know that Forex traders use Fibonacci. It's very common to use Fibonacci tools in Forex trading. You see on your screen in front of you right now the S&P futures market. Certainly indexes, ETFs, obviously individual stocks is what we mainly focus on here at optionslam.com because we're interested in earnings events, and it's only individual equities that have earnings events, right? The S&P 500 doesn't have a earnings event, but all 500 stocks in the S&P 500 do have earnings events of their own, etc. So I'm going to go ahead and I know that there's a few stocks. I've got a list here of a few stocks that are going to have earnings coming up in the near future. And let's just take a look at some of those stocks. And let's look at the retracement tool. We'll start with the retracement tool. But today I want to spend some time on the extension tool. And I talked about the retracement. So let's start with the retracement tool. Let's start with a stock. We got Taiwan Semiconductor is going to be having earnings here coming up in the near future. Okay, I've already got, I've got an extension tool on here. Let me get rid of that. I'm just going to remove that drawing. And let's go to an important high to an important low. Now, when I see a chart like this, one thing I want to caution you about is how do I know when I'm looking at a 1 year, what I'm looking at here, by the way, is a 1 year, 1 day chart. Okay, so each candle is 1 day, and I'm looking back 1 year. But I go back almost 1 year, and there's a very, the highest high I see on the chart in front of me. How do I know that just beyond 1 year there isn't a more important higher high? Well, I simply have to extend my tool out. I can simply go to a longer time frame just to verify that this is the important high that I need to work with. So I'll go to the 3-year weekly, And there's a high, a very high high, but not quite as high as the one that showed up in the 1-year chart. So, okay, now I've verified that that is the most important high that I can work with. And so therefore I can go back to my 1-year, 1-day chart now. All right, now I'm going to choose that high. I'm just going to put my cursor at the high of that high point right there at the, and I use the wicks. I don't use the body of the candle, and I'm going to go to the lowest low on the chart, the lowest low on the price chart. And let's see. Okay, I've got the wrong tool highlighted here. Let me remove that drawing, and then and here, this is my retracement tool. So I'll go from the highest high, the most important highest high. Come on, okay, and down to the low. And I've got the 382 plotted here. So let me show you now. Price didn't quite get to the 382. Where did it get to? I'm going to right click on any of these plot lines, and I'm going to go to Edit Properties. And you're going to notice that I have the 0.236 hidden. I'm not showing that. I also have some plot numbers. You might want to take a screenshot here, or you can also come back and get the replay of the video as well. I've also got some numbers here that are outside of the retracement levels. I've got the 0.236 hidden. I've got the 0.786 hidden. In my extension tool, I actually use these two numbers. In my retracement tool, I generally don't. But let's go ahead and unhide the 0.236 here and see what happens. Aha, price did respect the 0.236. You see how that 0.236, so you can see the coefficients are plotted over here on the left side, and then the lines are extended to the right. The 0.236 did become an important number here, and price actually was attracted to it, and it kind of got stuck here, didn't it? I generally don't use the 0.236 in my retracement tool because I generally find that the 3.8, the 5.0, and the 6 and the 6.1.8 are the more important levels. But in this particular example, the 0.236 was the important number here in this stock. Now let's go to the let's go back for a second and go back to Edit Properties. This is how you, and then here's another one that I have hidden. I'll go ahead and let that one plot. Okay, and that's how easy it is to customize. And then these other numbers here are not available, readily available by default. If I were to click here, reset the factory defaults, those would disappear. I had to add those curves manually, which is easily done. You just click that button, and then it gives you another curve, and then you just type in whatever number you want there. And I'm going to not do that because I've got all the curves in that I desire. Okay, so those are the curves. And these numbers that are outside between 0 and 100, or between 0 and 1, these plot outside. Now let me show you something that is interesting and important. So if I were to, the reason I do it the way I do it, okay, if I zoom out here, you'll see that those numbers are plotting outside the zone. You say, oh, those numbers, what do you need those numbers for? They're so far away from where price is. You're going to see, as we look at some other price charts, that these numbers do come into play. They do very much come into play, okay? Just depends on where you draw your lines from, etc. So I could, let's go and edit properties again. And let's get rid of the negative side here because this is commonly what happens. And if I save that as default, And let's remove that drawing, and let's just zoom in on a okay, I lost it. Let's go to another stock. Let's go to Netflix. Also going to be having earnings in the near future. Okay, so how I'm trying to teach several things out here at the same time. So I'm trying to teach how to use the Fibonacci tools and also how to customize them. Okay, so I'm doing a couple things here at the same time. Let me zoom out on this a little bit. Am I 1 year, 1 day here? I should be 1 year, 1 day. Okay. I'm going to go to a 3-year weekly on this one. I think there's some interesting stuff. No, here, let me do this. Let me go to, I think I have, do I have a 2-year? I don't. I do in my live thinkorswim. Let me customize this 1 year, 1 day. Let's see if we can customize this time frame. And let's go to a 2-year, 1 day. Hey, there we go. And let's do that. There we go. Now we've got a couple, an additional earnings event in here. So let me show you one example. I'll come back to customizing the tool with the edit function here. Let's look at, you can see the earnings dates are plotted here right on the chart. Okay, they're designated by these little light bulbs. Okay, and then that red dot is the conference call, typically on the same day. If we take and go back in time and place ourselves on this day, right before the earnings event, we would be right there, okay, right there, all right? Well, at that point, an important high to low in a retracement tool, right now I'm on the retracement tool, this is the extension tool right next to it. So let's experiment with the retracement tool. If I wanted to play with this and say, well, where could price go? It's earnings day. Remember, we're going to go back in time. We're going to place ourselves on January 20th before the earnings come out. They come out after the bell. Where could price go? It could go up, it could go down, it could go sideways, but generally on earnings events, price goes somewhere. It doesn't go nowhere. Well, I should say that often. It can go anywhere. But let's just put a retracement tool on the important high to the important low, which is going to be that day. It just so happens to be the day that we're focused on, the day that we're reliving, January 20th. And if I plot that, the way I have my tool set up right now, it plots some extensions way up here, and up here. So I was, and price didn't go that way. But what if I go and edit my properties, and then I take the opposite side of the 1.618, that would be the negative 0.618. Now I'm subtracting 1 from that because I got to go all the way from 1 to 0. So I subtract 1 from 1.618, and that's why I use the negative 0.618. That's the best I can explain it. I hope it makes sense, but you will see when I plot this on the chart, it will be the equal and opposite of the negative 0.618 will be equivalent to in distance away from the zone as the 1.618 is to the positive side. The negative 0.618 will be to the negative side. So let's go ahead and plot these numbers now. And this is how I just keep mine set up, by the way. I generally, on my retracement tool, ignore those two curves or coefficients, if you will. And this is what I generally use as my default. So I'm going to go ahead and click that Save as Default. And now you can see, and we'll zoom back in here. Now I am plotting numbers outside of the 0 to 1 zone. I'm plotting numbers on both sides, the 1.618 and the negative 6.1.8. And where were we? We were going from this high to this low. And where did it plot numbers? Guess what? The very next day, let's zoom in on that. Whoops. The best way to get out of this is to go to a different stock and then come back to that stock. All right. And then let me zoom in on that. And where did price go the very next day? Right to the negative 61.8. So this is a way in which you can use Fibonacci. This is not an extension tool, but this is a, what's the word I want to use? Oh, shoot, the word escapes me. But this is using the retracement tool to show where price could go if it doesn't just retrace inside of the zone from 0 to 1, and instead it extends the move. This tool also, by plotting these numbers outside the zone, can give you an indication where price is going to be attracted to. And as you can see, now highlight this, price was definitely attracted to that 618 number. I can't think of the word I was looking for. Sorry about that. But anyway, you can see that this is another way that you can use the retracement tool by adding numbers that are not necessarily the default in your charting program. Okay? All right. One more time, I'll just show you what those numbers are. Boom. Okay? And you can come back and customize your charting program by adding curves and then showing or not showing by using the check boxes there. All right, so that's one example. Let's do it again. Let's remove that drawing. Let's do it again. Let's take a look. Let's remove all drawings. Clear the drawing set. Yes, get rid of all drawings. All right, so we just did this date to this date to find where price went. Let's look at the next earnings event. Here's the next earnings event. All right, well, if we're here, let's go to this day. All right, what is this date? April 19th. After the close, they're going to report earnings. Let's use the retracement tool again. Let's go to the highest high since the last earnings. And whoops, I got the wrong tool. Let's go back to the retracement tool. Let's go to the highest high since the last earnings to the lowest low since the last earnings. Or you could say, well, let's just go to the low of the day right before the earnings event. You could say, well, that's an important day too. That's an important low. Well, it happens to be equal to the lowest low, by the way. So in either case, you're going to end up with the same plot. And where does price go the very next day? Let's zoom in. It opens exactly, almost exactly, at the negative 61.8 value again. Two earnings in a row. Could be coincidence. Could be coincidence. But it's starting to seem less likely. Let's remove that drawing. And let's zoom out. Do we have any more? Let's see. So we did this earnings event. We did this earnings event. And then let's take a look at this earnings event. Okay. Now I'm going to switch tools on you here a minute. And I'm going to teach you about the Fibonacci extension tool. This is a tool that I use very regularly. I actually use it to predict where price might go, especially if I've determined a trend. If I determine that there's a trend in price and I want to go with the old adage, the trend is your friend, well, I know where to take profits. So if the trend is up and the trend is my friend, I want to get into a bullish trade. How do I know when to get out of that trade? Fibonacci extensions and retracements to a certain extent as well can give me price points at which I can place or create profit target zones. So let's look at the Fibonacci extension tool, which is right here next to this is the retracement tool, and here's the extension tool. So I'm going to switch tools. Now, the Fibonacci extension tool requires 3 anchor points. This was not in my PowerPoint slide. We were in a hurry to get over here to the charting program. So let me tell you, it requires 3 anchor points. Unlike the retracement tool only requires 2 anchor points, one important high and one important low, and then the extension tool needs one more important high or low, depending on which way you're drawing. So let's zoom in on this area. Okay, we're looking at, let's see, we looked at the previous earnings there. So now we're going to put ourselves about here, okay, on this day, July 19th, earnings after the bell on July 19th. Where could price go? Rather than use the retracement tool, I could use the retracement tool, but I want to illustrate now using the extension tool. So using the extension tool, I might look at this chart and have a cursory feeling that, well, you know what? The stock's been beaten up. I see a low, and then I see a higher low. Is it possible that the trend has changed and I could possibly look for a bullish trade? Well, what would the extension tool do for me if I bet on the bullish side? Well, I would use the extension tool. I need 3 anchor points. I need an important low, an important high, and another important low. So let's start with this important low. This is the lowest low I see on the chart in front of me. So it can't get any more important than that. And I'll click once there, and I'll drag to the next important high. Remember, let me back out of that. Remember, we're pretending that we are back in time on July 19th, and we don't know where price is going to go. We don't know about all of this history yet. We're all the way back in July 19th of 2022 on this day. So we're just trying to evaluate where could price go if things have changed for Netflix, and I want to place a bet to the bullish side. If I want to place a bet to the bullish side, where might price possibly go to? So let's do it. Anchor point 1, important low. Anchor point 2, an important high. Anchor point 3, the next important low, right there at the low of that day. What does the extension tool do for me? Let me widen this up and see if we can zoom in on this a little bit. And the extension tool plots a couple of points outside of the zone. The zone is from 0 to 1 and then back to another important low. So the zone is the widest points of the 3 anchor points chosen to create the drawing. And then what the extension tool does is it says, if price is going to go outside of the zone, where could it possibly go and possibly meet resistance somewhere outside of the zone? So the zone, again, the highest high in that zone was right here at about 209. Okay, 208.84. You see it plotted right there. And where did price go after July 19th? Well, it didn't go directly there, not in one day, but it certainly did go there and hit that price point on this day, about 3 weeks later, I'm guessing. And then it hovered around there and just challenged that price point for an extended period of time, basically until the next earnings. Let's remove that drawing. Let's try the, let's zoom out here and let's look at, when I mess that up, I think the easiest way to get my chart back is just to go to a different stock. If you guys know of a better way to do this, but that's my shortcut to get back to a chart that I want to work with. All right, so now I'm going to just zoom in on this area. So here we are on the last earnings. Now we're not quite to the next earnings event yet. It's coming up in a few weeks, okay? It's coming up in a few weeks. But again, here's an example of how you might use the Fibonacci extension tool. And irrespective of, okay, well, let's see. Where was the earnings date? Here's the most recent earnings date, October 18th. Okay. If I'm looking for an important low, I have my choice. And don't forget, if you'll remember in last week's webinar, we plotted, we didn't use the extension tool. We only used the retracement tool, but we used and you can use them in conjunction with each other, by the way. You can use them in conjunction with each other. You can plot them both at the same time and look for areas of confluence. In other words, where the lines, remember last week, where the lines all kind of congregated in one very tight zone. Yeah, I was using the live chart, so I can't. It's going to be hard to reproduce. You'll have to go check the last webinar to see that. I'm not going to try to recreate that right now. All right, let's do another example of an extension tool, and that would be simply choose an important low, go to an important high, and project from another important low, and then the tool plots these lines and says where could price meet resistance. A very important extension level to me is the 7.86% level. That is a very important point, as is the 100%, okay? As is the 100%, but the 78.6 comes into play oftentimes, and I pay close attention to it, and I use it for a target. I use it for a target all the time. The 786 is very important to me in the extension tool. It is a number that I generally ignore in the retracement tool, by the way. Okay, so, and some of this becomes a matter of personal preference, and you will develop your own personal preference as you use the tools going forward in time. You may disagree with me and choose to use certain plots that I don't use, or vice versa. Whatever the case may be, make it your own. All right, let's look at another stock. Let's see, GS. And then if you guys want to bring, let's see, look at Nike. Someone suggested look at Nike. That's the only one I see that anyone suggested. Let me expand this chat box and see if I missed anybody else. Well, let's see. Let's do Nike. Let's see what's up with Nike. Didn't Nike just report? Yeah, Nike just reported. Okay, yeah, Nike just reported last week. Yeah, okay, I thought so. All right, let's zoom in. Let's zoom in. Let's play with Nike. All right. Well, what happened to Nike? Oh, big earnings. I didn't play this one. I didn't play this one last week. Honestly, I haven't been trading a lot lately. I've got an injury and I'm getting ready to go in for surgery here in a couple of weeks. So I'm backing off on my trading because I'm going to be out of commission a little bit for a little while. Nothing life-threatening. Just, you know, shoulder surgery, actually, rotator cuff, that kind of thing. All right, so let's see. Interesting. Well, boy, I love this. This is a beautiful chart. It looks perfect to apply fib tools to. You know what? It just has the swings. So what could we do? One thing we could do, let's jump back to the retracement tool. I just like to play with fibs. Let's jump back to the retracement tool a quick minute, and let's plot from this lowest low here, which happened right after the last earnings event, and let's go to the highest high on the price chart prior to the most recent earnings event. Okay, so and price came down and respected the 382 level, didn't it? And then when the earnings came out, price jumped right back to the 0% line. Interesting. Let's take that off of the screen and let's look at how might we apply a. Okay, let's try applying a extension tool to this. All right, we'll switch to the extension tool. We'll go from, remember we need 3 points now. So we'll go from a low to a high to a low right before the earnings event. And what does that, we'll put that right there at the lowest low. And what does that do? It plots numbers at the 382, the 0.50, and where does price go? It goes right to that same exact. In fact, it's locked in that zone, isn't it? You see how price is locked in that zone between the 3.8 and the 5.0 right there? Yeah. So this is another example. All right, let's go to another stock. GS, Goldman Sachs. You can put any stock, it doesn't matter. We're running out of time. Let's do this. Let's go to a smaller time zone. Let's go to a 180 days. That's a half a year almost. Let's try this. A 20-day. Oh, and I've got overnight sessions plotted in here. So here we're on a 1 hour session. How do I quickly hide those overnights? Let's see, can I know how to do it, but I was looking for a shortcut here. I don't have a shortcut set up. Get over here. Well, I'll just work with it. I'll just work with it. All right. So yeah, when I only go down to 20 days here, then I'm missing all my earnings events. So that isn't going to help me. But what I wanted to show you, let me do this. Let me do this. Let's go to who's volatile today. Let's go to an intraday chart. 5-day, 5-minute. All right, here we are on a 5-day, 5-minute. We'll just stick with Goldman Sachs. All right, here we are on a 5-day, 5-minute, and so I'm only going back 5 days. So let's take a look at using a Fibonacci extension tool on an intraday time frame of 5-minute candles. Let's go to the important high here. Plot that down to an important low and project from this other important high. And where does that plot price to likely go? The 0.50 found support. Price was attracted to the 3.82% level and is currently trading in between those two important levels. All right, any questions or other suggestions? SCCO, okay. I'm familiar with that stock. That's Southern Copper, right? Yep. Southern Copper. You have a time frame, Randy, that you're interested in? Let's see. Let's back out to a 1 year, 1 day. Okay, so we've got earnings. We just had earnings on October 27th. So we should have earnings coming up here in about 3 weeks, right? 3-4 weeks, about 4 to 5 weeks from now is probably going to be the next earnings event. Let's see. Well, let's look at some past earnings here. Here's an earnings event here. Well, I can see how this is going to. Let's jump back to the retracement tool. We'll go to the important high. We're going to go back in time to this earnings event, which was May 2nd before the market. Excuse me. What was it? May 2nd after close. May 2nd after close. That's this red candle right here. Okay, where could price go? Let's take the important high to the lowest low prior to May 2nd, which happens to be May 2nd. And where could price go? It could go to the negative 61.8 level on the retracement tool. And sure enough, that's exactly where it went. And it got stuck there for many months. For many months. Okay. Now, can you use Fibonacci tools on the intraday time frames, the 5-minute time frames, or the 30-minute time frames, or whatever the case, even the 1-minute time frames? Absolutely. Can you use it intraday? Yes. Do I? Yes. Oftentimes I do. Sometimes I find myself in a day trading mode when I'm right down to the wire on a trade. Generally, I don't day trade, but sometimes I'm up against some gamma risk in a trade, and I find myself in day trading mode on a trade that I might have been in for 3 to 5 weeks already, for example. But so then I'll actually apply Fib tools on an intraday chart. Generally, I like the 5-minute for intraday work, but I really like to apply the Fib tools to the longer time frame charts and to get the bigger picture, the more important price zones, the price areas that are pointed to and identified by those longer time frame charts. So equities, options, or futures. Randy says go to settings, then equities, options, or futures. Right. Okay. Thanks, Randy. Yeah, I know it. To get rid of the after hours plotting. I know. I'm feeling rushed because we're running out of time, and I didn't want. I just used it the way it was. So okay. So there's Southern Copper, and you can see it doesn't matter what stock or what time frame. You're going to find that the Fibonacci levels are areas that price is attracted to, finds resistance at or support at, or possibly reverses direction at. Okay, so this oftentimes, okay, so let me talk about another way that I like to use Fibonacci tools, and I mentioned this earlier. Let's remove this drawing. So if I were in this stock and I was bullish, and actually, the truth is I actually do own this stock. I do own some shares of this stock. And I'm underwater on it slightly. I'm a little bit underwater on this stock. But it looks like, looking at the 1-year daily, this stock may have put in a low. Let me get optimistic here for a minute, and because I got a New Year's coming up. Is there something that I could do to project where price could go to the upside? Well, I don't have a lot to work with here, but let me go with the extension tool, and I'll go to this lowest low on the visible chart. I'll go to a recent high since that low, and then plot it from the pullback low, which is that day. Where could price go? Well, whoops, it didn't plot. There. Well, price could go to the 261.8 level. It tried to, didn't quite get there. If it can break through that, where is it the next level? I might put a target to take some profit off the table at the $74.97 level. I could actually just come in here and say, create an alert. When stock is at or above, 74, whatever, 75. Create that alert right just under that Fibonacci extension zone. And I could add a note, take some profits off the table. This is a Fibonacci possible place of resistance. So that is another way that I use Fibonacci tools, not only to predict or project where price might go at an earnings event, but even on a longer term hold, like I happen to be, and maybe Randy might be also. No, Tom brought FCCO to the table. Okay. Well, look, folks, that's it. We're out of time. I guess. I had one more thing on the PowerPoint I wanted to bring to your attention. So let's just take about 2 or 3 more minutes here, and I'll give you a couple fun with Fibonacci tools that you can play with in your own time. We don't have time to do this here today. Maybe we'll do 1 or 2. Let's see. Fun with Fibonacci. Well, this is the sequence. I'm sorry, I had a phone call. I forgot to shut my phone off. That person is likely to call me back. I'll ignore it the next time. Let me see. Sorry, I forgot to shut my phone off. Hang on, bear with me a minute. I'm going to turn this down. Okay, there we go. I'll ignore that call when it tries to come in again. All right, I turned the volume down so we don't get interrupted. Sorry about that. All right, so fun with Fibonacci. Take any 3 adjacent numbers in the sequence. Okay, we're looking at the sequence above. Take any 3 adjacent numbers. For example, the 358 or the 8, 13, 21, 21, 34, 50. Any 3 adjacent numbers. Square the middle number. Okay, square the middle number. Multiply the first and third numbers. The difference between these 2 results is always 1. Square the middle number and multiply the first and third numbers in any sequence of 3. The difference between these 2 results is always 1. Take any 4 adjacent numbers in the sequence. This is a fun one. Multiply the outside ones of the 4, multiply the inside ones of the 4. The first product will be either 1 more or 1 less than the second product. The answers are only going to be one apart, plus or minus one. Try it, folks. The magic of Fibonacci. Here's another one. The sum of any 10 adjacent numbers equals 11 times the seventh one of the 10. Okay? Take any 10 numbers, add them together, and that sum will be equal to the seventh number times 11. Side note, Mesoamericans respected the numbers 7 and 11 as special. I wonder if that's where that name of that fast food joint comes from. Not fast food, but a convenience store, right? The convenience store, 7-Eleven. Okay, folks, that's it. Thanks for being here. Thanks for sticking it with me here through another great trading year of 2022. Looking forward to trading with you again in the upcoming year, 2023. Lots of exciting trades to happen, lots of exciting webinars to provide for you. Your suggestions, your comments, your questions are always welcome. optionslam.com@gmail.com. Goodbye for now. Happy New Year and good trading.